This is Rod Kusin Spooman for Risk on March the 23rd, 2010. All times on the chart are Central Standard Time. We're charting the euro, and we're going to show you just a few things that went into some of our trades today. We are still in, I guess I would call it a developmental mode with regard to the use of the group reversal system pertaining to the euro. But the two things that we find to be most useful so far is the use of our adaptive price zone indicator, which you see on the screen here. Now, if you've looked at some of our other videos, the way in which we are using the adaptive price zone, when the EC goes way beyond the zone, we will expect that the market will continue to move, will continue to trend until such a time as new highs are reached that barely get into the zone, or maybe a little bit above the zones. So this would not be a short trade, whereas this would be. Now you have a nice gap line here. This red line is a gap line. That's tagged again right in here, and then the market drops. Over here, we come into the zone. It does not exceed it, and we move up into the next zone. So a nice short trade, followed by a long trade, followed by a short trade. Now you see right in here how it continues to be way beyond the zone. We want that to flatten out as it does right in here, and on this particular move back down, it's no longer exceeding the zone and roughly the same price as it was previously. Now we have a long trade. Here just barely gets into the zone. Short, again short in here, but as you see, the market now drops. You can't tell right in here whether this is good to go long or not. This could be a long trade, as could this be. You're getting whipsawed in here. All right, you're lower here right into the zone again, looking for the long trade. You're not getting stopped out. You got plenty of time to tighten any stop that you might take, but you're not really making any money either. And you're not profiting by the lower price of the euro as you're dropping. And then finally in here it begins to level off. You get a nice little gap here. So we see a move, whoops, a little bit too fast there, move back up into the zones. Opportunity for a short. Excessive moves above the zones tells you to wait. And right in here, it's not making it up above the zone any longer. Now we're ready to short. Little false signal in here. Then long, short, wait. This was a little bit confusing. It should continue to move up. On the other hand, in this case, it moved down, just tagged the lower zone, rallied right back up. New high, trailing off, down she goes, wait, wait, and then this became one huge wait. As you can see from the horizontal line, the euro continued to test that low and never really finally took off. There's a nice short here, doesn't move into the zone here, but we have a group reversal there that helps us to see the market is about to take off. Now we have a couple of nice gaps here, so this is a hold pattern. This is more probable short. And then finally, down she goes until the latter part of the day, and we have a nice long trade here. Not here, but here, and we'll show you why in just a minute. We'll show you our trades as well. But before we continue any further, I'm going to bring over another chart. Now in this chart, we're plotting multiple stochastics with different intervals on the euro. 900, 14, 2000, 3000, as well as 5000. So when we get into an overbought condition on all of these charts, what we want to wait for is evidence of a crossover. So again, you can, by plotting these multiple stochastics without the data, you can get a good idea as to where this market is most likely going to have some sort of a pullback. We get overbought, and like in here, we're not on this 2000 chart. In all probability, it's going to get above 90% on both slow K as well as slow D. Notice when that happens, right in here, that's not the case on the 3000. That doesn't happen until right in here for the first time, right in here. So then it's simply a matter of waiting for the faster stochastic to become overbought once again. And so here's a possible short right in here at the crossover, and then another one right in here at 923. 919, and then 922, 923. There we are. So using this kind of a indicator allows us to have a visual confirmation, very useful in just helping us to see where we need to get ready for some kind of action. Here we're showing you some of our automated signals. We have a couple of strategies working on this workspace, one of which was a better strategy than the other. The green arrow is a superior strategy. A little premature here, doesn't really make much. Here we have a nice move. We have an entry here at right around 95 on the euro, takes it all the way up to 07. So there was plenty of opportunity for profits on that trade. Here, again, this is all latter part of the day. The blue arrows precede the green, so the green strategy, green arrow strategy, is much more effective. And there we find our last trade. Beautiful, real beautiful trade here. Look at that. In at about 84, short trade right at the top. Couldn't get better than that. Look at that. Right there. How many pips is that? We're looking at 84 roughly to 15. So about 30 on that. So that's real good. So we're going to continue to keep watch on what's happening with our tick strategy in conjunction with the euro. Things are really beginning to develop on this. It's looking very, very promising. So we'll keep you appraised of how things are going, and by all means go to our website, RSKsys.com. Ask for a demo, call us, email us, comment on our videos. We'd like to hear from you. This is Rod Kusin, Spooman for Risk.